The European Central Bank just officially backed centralizing all crypto oversight under one watchdog. Ripple just secured full payment authorization across all 27 European Union countries, and a consortium of 37 European banks is now building a euro stablecoin, and the majority of them are confirmed partners of the infrastructure already running on the XRP ledger. Before we go any further, did you know Ripple already had full regulated payment rights across every EU country before today's headlines? Drop a yes or a no in the comments right now. This is not financial advice. This content is for educational and formational purposes only. Always do your own research before making any financial decisions. If you find this kind of global analysis useful, go ahead and hit the like button. It helps this channel reach other investors who need to see what is actually being built here. Now let me walk you through exactly what happened and what it means for the thesis you have been holding. To understand what is happening in Europe right now, you need to understand one concept that most coverage skips past. Passporting rights. The European Union is 27 independent countries operating under a shared regulatory and economic framework. When a financial institution receives a license in one EU country, and that license includes passporting rights, the authorization automatically extends to all 27 member states. You clear one regulator, you serve an entire continent. That is how EU financial infrastructure works. And that is the mechanism that makes what Ripple has just done structurally significant. At the start of this year, Ripple secured preliminary electronic money institution license approval from Luxembourg's financial regulator, the Commission to Surveillance Dr. Financier, known as the CSSF. Luxembourg is not a random selection. It is the financial hub of the European Union, home to a concentration of investment funds and regulated financial institutions that rivals any city on the continent. That preliminary approval has since been followed by the full EUMI license. Ripple is now one of only 14 authorized electronic money institutions in Luxembourg. Because of passporting rights, that single designation clears them to offer regulated electronic money and full payment services across every one of the 27 European Union member states. An electronic money institution, an EMI, is a company authorized by a financial regulator to issue and manage digital money and process payments at institutional scale. It carries formal regulatory standing, compliance obligations, and the legal right to operate across the full jurisdiction it covers. It is not a bank in the traditional sense, but it holds comparable regulatory legitimacy when it comes to payment infrastructure. The market that Access opens is not a small one. The EU non-cash payments market processed over 16 trillion euros in the first half of 2025 alone. If you're trying to understand why a payment infrastructure license in Luxembourg matters, that number answers the question. Ripple's European story does not start with this license. It started building more than a decade ago. Since 2014, dozens of financial institutions, including HSBC, UBS, and Western Union, announced trials or more advanced commercialization efforts using Ripple's technology. Out of those early relationships grew the Global Payment Steering Group, the GPSG, a governance body formed specifically to develop the rules and standards around the use of Ripple's technology for global payments. These institutions became its founding members. That is not a recently assembled network. It is infrastructure with years of institutional roots already embedded in it. Today, Ripple reports more than 75 licenses and registrations worldwide, over 95 billion in total volume processed, and reach into 90% of the world's daily foreign exchange markets. The European EMI license is not the beginning of a global strategy. It is the regulatory formalization of one that has already been operating at scale. The most direct reflection of where that strategy stands in Europe right now is Casey Slaughter, the UK Chief Executive and Managing Director for UK and Europe at Ripple. She was recently named one of the financial news rising stars of European finance. That recognition comes from outcomes, not promises. Her description of the past year was specific. Ripple delivered digital asset infrastructure to some of Europe's biggest banks, naming BBVA and Intesa Sanpaolo directly. She confirmed that licenses in both the UK and the EU are fully in place, enabling fully licensed crypto-enabled cross-border payments across the region. She also described a series of landmark acquisitions being incorporated into the business, including in Europe, to significantly expand what Ripple can offer across payments, treasury, and trading. BBVA is a major global bank headquartered in Spain, with operations across Europe and Latin America. Intesa Sanpaolo is one of Italy's largest banks by total assets. These are not exploratory conversations. These are confirmed delivery relationships at a scale where institutional reputations are on the line. Cross-border payments means moving money between countries. Today, that process runs on correspondent banking infrastructure that typically takes 1 to 3 business days, passes through multiple intermediary banks, each collecting a fee, and involves manual reconciliation that introduces error and delay. Ripple's infrastructure compresses that to near real-time settlement at a fraction of the cost. For the banks that have integrated it, this is not a marginal efficiency gain. It is a structural change to the architecture of how payments move. On top of the banking relationships, Ripple announced its first Europe-based investment management partnership. Aviva Investors, an asset manager with over £250 billion in assets under management, is working with Ripple to tokenize traditional funds directly on the XRP ledger. Tokenization means taking an existing financial asset, a mutual fund, a bond, a real estate portfolio, and representing fractional ownership of it as a digital token recorded on a distributed ledger instead of paper-based records, multi-day settlement cycles, and manual reconciliation. You get near instant programmable ownership records that are auditable in real time. Aviva Investors chose the XRP ledger for its speed, low cost, institutional-grade settlement, and compliance-focused infrastructure built specifically for regulated markets. That was not a default selection. It was an evaluated decision made by one of the largest asset managers in Europe. The regulatory foundation is in place. The banking relationships are live. The asset management integration is underway. Which brings us directly to the question underneath all of it. If Europe already has this infrastructure operating, why is the European Commission now opening a full public review of the regulatory framework it only recently put into effect? MiCA stands for Markets in Crypto Assets. It is the European Union's regulatory framework for digital assets, and it is among the most comprehensive crypto frameworks ever introduced anywhere in the world. It went into full effect in 2024, setting clear rules for who can offer crypto asset services in the EU, what disclosures are required, and how stablecoins are issued, backed, and maintained. The European Commission has now opened a public consultation asking whether MiCA remains, in their own words, fit for purpose. The stated reason is a shifting global policy landscape and continued market evolution since the framework came into effect. Coinbase's European policy head called for targeted improvements to keep Europe competitive, stopping short of backing any reopening of the framework's core principles. The pressure is coming from one direction: The United States is advancing its own crypto regulatory framework, and the rest of the world is watching. Caroline Pham, a central US regulatory voice, stated it directly. The rest of the world will follow the United States on crypto policy. They cannot afford not to. Capital and institutional activity flow toward regulatory clarity. If the US locks in a workable institutional-grade framework, financial institutions will orient toward it. Europe risks being left with a framework that was leading edge in 2024, but is outpaced by what the US produces. Christine Lagarde, the president of the European Central Bank, has named that risk with a specific term: digital dollarization. She's been direct and public about it. Her warning is that Europe risks losing monetary sovereignty to private dollar stablecoins. She has pointed to a $300 billion global stablecoin market that is overwhelmingly US dollar denominated. Tether and Circle, both American companies, both backed exclusively by the US dollar, hold a combined scale that European alternatives have not come close to matching. Her framing has been stark. The euro survived the petrodollar era, but it may not survive the digital dollar era. While Europe debates, America advances. For someone who has spent decades building retirement savings in euros or in assets tied to a European monetary system, watching the infrastructure of the digital economy tilt toward dollar-denominated instruments is not an abstract policy question. It is the kind of structural shift that moves slowly until it moves suddenly. The window to understand what is happening and be positioned before it becomes obvious closes before most people realize it was ever open. The European response is now taking shape. A consortium that includes UniCredit and BNP Paribas is preparing a euro-pegged stablecoin for the second half of 2026. Separately, an initiative called Qualis has secured backing from 37 European banks specifically toward a euro stablecoin project. The named participants across both efforts include DZ Bank, Intesa Sanpaolo, BBVA, BNP, Paribas, ING, and UniCredit institutions with documented ties to Ripple's payment network and to the Global Payment Steering Group built around Ripple's technology for global payments. France has officially urged more euro stablecoins and tokenized deposits. The on-chain market capitalization of euro stablecoins has surpassed 760 million. Euro stablecoins surged 1,200% under MiCA regulation. At the start of 2025, the total euro stablecoin market held less than $100 million. The regulatory clarity that MiCA provided triggered a 12-fold increase in months. The UK has launched its own stablecoin framework. Japan is advancing its stablecoin infrastructure. The race is fully active on multiple fronts. Now here is the piece of this story that most coverage mentioned and then moved past without explaining. In October 2025, the European Central Bank published the participant list for its market contact group. Specifically, the PONDIS group focused on distributed ledger technology-based transactions within central bank money. Central bank money is distinct from commercial bank money. It refers to the official reserves held at the central bank itself, the most foundational layer of the monetary system. The ECB convened this group to formally evaluate how distributed ledger technology could interact with that foundational layer. One of the named participants in that group is a project called Axiology. Axiology is built on the XRP ledger. It was designed specifically around tapping into DT transactions within central bank money, and its inclusion in the ECB's official contact group reflects a deliberate selection decision by the central bank itself. Central banks do not include random technology and formal institutional consultation frameworks. They include infrastructure they are actively and seriously evaluating. Axiology did not go quiet after that consultation. It is still active, still built on the XRP ledger. At the same time, the ECB is now formally backing a plan to move oversight of major crypto asset service providers, trading venues, and clearing houses to ESMA, the European Securities and Markets Authority based in Paris. The ECB's stated justification is direct. Large crypto firms are becoming systemically relevant, and they require unified oversight to prevent risk from spreading into the broader banking system. The convergence here is a pattern worth naming clearly. The ECB runs an official consultation on DT-based central bank money settlement and invites a project running on the XRP ledger to participate. That project remains active. The ECB simultaneously backs a formal move to centralize oversight of the major crypto infrastructure serving European institutional markets. The 37 European banks forming a euro stablecoin consortium have documented relationships with Ripple's payment network. Ripple holds full regulated payment authorization across 27 countries. Aviva Investors is tokenizing funds on the XRP ledger. This is the architecture of a system being assembled, not in press releases, but in official regulatory channels, institutional consultation groups, and documented commercial commitments. Let me bring all of this together, because the individual pieces tell one story, and the pattern they form together tells a different one. Ripple has the full EUI license. That is not a pending application. It is a granted operational authorization to offer regulated electronic money and payment services across all 27 EU member states through passporting rights from a single Luxembourg registration. It exists now. It is active now. The banking partnerships are not aspirational. PBVA and Intesa S. Paulo are confirmed delivery relationships. Casey Slaughter described it as delivering digital asset infrastructure to some of Europe's biggest banks, and she was recognized by Financial News as one of the rising stars of European finance for what she and Ripple built in the region over the past year. Aviva Investors, with over £250 billion in assets under management, chose the XRP ledger to tokenize traditional funds not as an experiment, as a regulated commercial launch. That is a structural commitment at institutional scale. The 37 European banks developing euro stablecoin infrastructure through Cavallis and the ING UniCredit BNP Paribas Consortium have documented ties to Ripple's payment network and the Global Payment Steering Group. The XRP ledger's infrastructure sits at the center of the euro digital payment rails being developed right now. And then there is Axiology, selected by the European Central Bank to participate in an official consultation on DLT-based transactions within central bank money. Built on the XRP ledger, still active while the ECB simultaneously moves to formalize and centralize oversight of the crypto firms serving European institutional markets. The pattern across all 5 of these layers is consistent. Every major institutional move in the European digital financial architecture, from banking partnerships to asset management tokenization, to euro stablecoin development, to central bank DLT evaluation, runs through infrastructure connected to the XRP ledger. Not because of announcements, but because Ripple has been present in the European market for years, building relationships, securing licenses, and embedding into institutional processes that most observers were not tracking closely. If you have been holding through the periods when none of this made the headlines, when the people around you questioned the thesis and the noise pointed in other directions, what is emerging from Europe is not a new story. It is the confirmation of a structure that was being built while attention was elsewhere. The infrastructure is already in place. The thesis is intact. The question that remains open is the one that matters most. When the ECB and European institutions move from evaluation to deployment, from the consultation table to live infrastructure at scale. What does the convergence of every layer we covered today look like? And which name in the ECB's own documented contact group list is the one most people have not looked at yet? After everything we covered today, which piece of the story do you think is most underreported? The axiology and ECB connection? The 37 bank Euro stablecoin consortium? Or something else entirely? Drop it in the comments. I want to know what part stood out to you most. If this video gave you a clear picture of what is actually happening, go ahead and like it. It helps this channel reach more people who need to see this. And subscribe so you do not miss the next one. Share this with someone in your circle who is only following domestic crypto news and has no idea what is happening globally. Stay informed, stay positioned. I will see you in the next